HDFC Life and CNBC Awaaz present Bima Sabhi ke liye.
If there's anything that the coronavirus pandemic has taught us, it is this. Life as we know it is uncertain. We can't really control how things will turn out or what new challenges life will throw our way. But what we can do is be better prepared. And life insurance is something that can help us tide over at least the financial loss, if not the emotional loss of something as unfortunate as losing life. Now, no matter what your current financial status is, how much you earn, it is impossible to predict when a casualty can strike. And therefore, if you thought life insurance is not for you, do think again. The benefits of having life insurance are aplenty. One of the most important life insurance benefits is that it helps you secure your family's future even if you're not around. It helps you replace the loss of income. It can help pay off any pending dues, meet any unforeseen expenses. It also diversifies your investment. It gets you tax benefits, and overall, it improves your financial security. Welcome to our special series, Bima Sabhi ke liye, brought to you by HDFC Life and CNBC TV 18. And today, we are going to discuss how life insurance policies can help you bounce back from some of the worst events of your life. To discuss all of that, I have two very special guests joining me now, Mr. P.V. Subramaniam, the CEO of Subramani.com, and Mr. Pankaj Gupta, the Senior EVP, Sales and Chief Marketing Officer at HDFC Life. Gentlemen, thank you very much for joining us on the show. Mr. Gupta, let me start by asking you, to any of the viewers watching this at the moment, why is life insurance so important and why should it be considered no matter how young or old you are?
Ritu, you actually summarized the need for life insurance almost perfectly when you gave your opening remarks. For the sake of completeness, I will give my perspective. The first thing about life insurance is that it helps you manage life's uncertainties. As you said, life is uncertain. Our own financial situation, the way our business is going, the way our job is going, is also uncertain. A product like life insurance makes sure that our family is prepared to face their life irrespective of what happens to us. The second thing about life insurance is that the product is normally a long-term product. For most of us, to plan for our savings, investments and financial situation over the very long term needs a lot of discipline and mental willpower. What buying a product like life insurance does is it makes it almost on autopilot. So if you buy a long-term product like life insurance, you are there with the product for a very long period of time. And the distractions that come to us almost on a regular daily basis of spending on something that may be good for the moment but may not be as per the long-term plans we have for ourselves and our family, that distraction is reduced. The third thing about life insurance, particularly when you buy it, when you don't need it, is that you get life insurance at a younger age at a much lower premium than you get it at a later age. Secondly, life insurance premiums also depend upon your health situation. As we get older, many of us have comorbidities and other situations, and we may not be eligible for the amount of life insurance that we need to protect our family. So going for life insurance early in life also makes sure that we get it at a lower cost and we get enough life insurance that we need for our family. Thirdly, there is also a rate increase that happens if somebody's health situation is not perfect as per the assessment in the health underwriting. And that possibility also is reduced if you were to buy life insurance at a relatively younger age. So that is my overall perspective about life insurance. It does help you with long-term disciplined planning to make sure that you and your family are able to live a life of pride and you are able to bounce back irrespective of the uncertainties that we all face in our lives on a daily basis.
Well, Pankaj, that's absolutely logical. The younger you are, the healthier you are, the lower the cost of purchasing that long-term life insurance policy. But Mr. Subramaniam, let me bring you in as well, since you're a financial advisor. You're giving a lot of advice to people about when to buy, at what price to buy. What are some of the myths surrounding the cost of buying life insurance, if you tell our viewers, and how they should go about approaching this?
So when you tell a person that one crore insurance is going to cost you, say, 15,000 rupees or 20,000 rupees, the immediate reaction is, oh my God, isn't it too much? So the counter question is, do you know what it will cost your family not to have not to have term insurance, right? What happens if you're not there? Who decides on the lifestyle of a family? Let's say the wife is dependent, there are children in the marriage, there are his parents, her parents who are all dependent on one income. What happens to all of them? How will they live, right? That's the question which none of them answer. Is that health and is that going to be worth more than 20,000 rupees a year? That is the question that you have to answer. And as Pankaj said, younger you are, the greater the amount of insurance that you can buy because the rates are low. So better to take an insurance as young as possible. And as you go older, if you don't need it, you can always drop it. Trying to increase your insurance after you develop some comorbidities is far more difficult. You may become uninsurable. Those are the risks. And when you become uninsurable, you will not be able to borrow. You will not be able to do some businesses. Life becomes hell, right? So better to take insurance exactly when you do not need it. Absolutely when you do not need it is the time you take it, so that when you need it, you're relieved saying, thank God, at least I've taken that insurance, right? So cost should be compared only if you know the opportunity cost of not having insurance. Since none of us know that, just get the term insurance. It's as simple as that.
Very aptly put, Mr. Subramaniam. Buy it when you do not need it. If you think you don't need it right now is exactly the time to go ahead and buy that life insurance policy. But hold your thoughts, gentlemen. We have somebody joining us who's experienced what life insurance can do firsthand and how it helped her bounce back from a very difficult situation. Sonal Cheda from Mumbai is joining us now. Sonal, over to you. Please tell us about your experience.
Hi, Ratu. I lost my dad in 2010 and, I was pursuing my MBA. It was all of a sudden, there was nothing wrong with him. Suddenly we figured that there were 3 blockages in his heart and, we had to get an angioplasty done and an angiography done and the whole lot of medical terms thrown at us. So we were really caught surprised with the entire situation and there was a huge medical bill to be paid. I was still pursuing my MBA. My MBA fees had to be paid. We were also relieved to learn that my dad had invested properly. He had taken a child education insurance. He had taken the correct health insurances, because of which all our bills were paid. Everything happened very easily. We were all kept at ease. Of course, losing him was the most difficult thing, but at least there was no financial strain that he left on us. And the first investment I personally made after starting earning or after starting my first job was an insurance. I personally believe in this product because I've firsthand understood that, it really helps you ease out your tensions and your worries and your monetary problems. I would encourage everyone to go for an insurance because I think it's the right product and it really helps you at difficult times.
So, Sonal, thank you so much for sharing your story. That's really brave of you, and I hope it inspires some of the people watching this out there that how timely insurance, buying a life insurance policy can really come to your aid. It may not ease the emotional burden, but it can ease the financial strain. Pankaj, let me come to you again. This last 1 year, if anything has been unpredictable in the past decade or so, it's been this last 1 year. Who would have thought we are where we are? And with the caseloads rising, with fatality rates also not looking very great, what are some of the big learnings we've learned, especially when it comes to life insurance and the importance of it, keeping in mind what happened during this pandemic?
Ritu, you are right. The last 1 year has brought the importance of life insurance, health insurance, front and center in everybody's mind. However, I take a slightly different approach. My view is that none of us knows where the next risk in our life is going to come from. What we can really do is to be prepared for an uncertain world. To be prepared for an uncertain world means that we have to have a long-term approach, we have to have a disciplined approach, and we have to be very systematic and planned about it. From that perspective, what life insurance does is that it helps you and your family live a life that is free of worries, even if there is a next corona or a next something else that can hit us all of a sudden from nowhere. As Sonal also shared, whatever happened was totally surprising and happened without any warning. And that can happen to any of us. So Corona is a reminder to us that we need to plan for the next risk. It may have brought it to the fore. However, the next risk need not be Corona. It could be something else. And the planning for life insurance, even health insurance, that requirement will remain even after our pandemic subsides, even after whatever is going on in terms of immunization is completed.
Okay, we'll take a short break on that note, but don't go anywhere. We'll be right back.
HDFC Life and CNBC Awaaz present Bima Sabhi ke liye.
Welcome back to our special series Bima Sabhi ke liye, where we're discussing how a life insurance product can help you bounce back from some of the worst events in your life. We have a host of consumers that have reached out, our viewers that have reached out with queries relating to life insurance. So let's address a few of them. The first one comes in from Pankaj Kalra, and he's worried about his age bracket. What he says is, hi, my name is Pankaj Kalra. I'm 50 years old. At this age, am I still eligible to take life insurance? If yes, please suggest which plans I can consider purchasing.
So at 50, see, every insurance company has two products. One is insurance, which covers early death, and one is pension, which covers the risk of living too long. People could live till the age of 114, 115. It may sound funny today, but there are enough cases of people living beyond 110, right? So that is covered by pension. So a 50-year-old, suppose he has some goals left. He's got daughter's wedding, son's education, daughter's education, whatever. Then for all those things, he can still take a risk cover, covering himself till the age of maybe 60 or 58 or whatever, by which time he thinks all his requirements will be met. However, if he has got health conditions, this may not be available, or it may be available at a very high rate, and it may not be worthwhile taking. However, almost all the pension products are open for him. In fact, pension products start at the age of 50. So he could take an annuity plan, he could take an accumulation plan which he could withdraw after the age of 60. He does not need an immediate pension because he may be working till 60. So that should not be an issue, but he can take a pension starting at the age of 60 or 65. He could take another pension at the age of 65 or 70 or whatever. So yes, all the pension products are open to him. He can take some kind of a critical illness cover in case he has not taken that, and his medical insurance he of course needs till he lives. So yes, he should be taking medical insurance, he should be taking some critical illness insurance, and he should be taking pension plans.
Pankaj, at that point, let me actually come to you. We've the past 1 year when we suddenly had coronavirus out of nowhere, what's the insurance industry, how did they react to it? Are there some specific financial products that can help come to the aid of people in pandemics such as these?
So, Ritu, what happened is that when the pandemic started, we tried to get into the mind of the consumer. And we realized that consumers were facing a lot of uncertainty in their health situation as well as in their business or professional or office situation. So our first attempt was to give them the assurance that our existing life insurance policies, for example, covered COVID as an event risk. That was the first attempt that we had. Beyond that, we also realized that people had started searching for term products on Google and other places. So we knew that there was a requirement for term products, and we brought certain real life cases of our customers who had taken life insurance well in time and how they benefited, so that people could plan for the subsequent phase of this pandemic. Pandemic did impact life insurance in multiple ways. There was a requirement for the product that increased during the peak phase of pandemic around May, June, July phase. Term products, for example, got a lot of salience. As a company, we also had to look at our underwriting policies to evolve with the times, how the situation evolved. We also evolved our underwriting. Some of our customers went through cash flow difficulties, and that meant that we had to focus even more on our renewal or persistency business, where we had to communicate to the customers the benefits of continuing with their policies, even if they were in a situation where they had temporary difficulties. So multiple ways in which the pandemic impacted us. My basic point, however, remains this product is something that helps you mitigate risk in the future. And future risk, you do not know from where it will come. So the importance and criticality should continue in the people's mind even after the pandemic phase is over.
That can cover you for anything that happens in the future. On that note, let me take the next viewer query. We've got a question coming in from Kanpur, from Mr. K.L. Prasad. I am a 58-year-old government servant and I'm about to retire in a few years. I want to invest for my post-retirement years. Can you suggest what options one should consider? And keeping in mind, this is a government employee, of course, he will have pension. Mr. Pankaj Gupta, would you like to take that?
So, Mr. Prasad, I hope you have a great retirement phase of your life. As a government employee, you will be getting a pension. That's my understanding. The other thing I would suggest is that at the time of your retirement, you typically get a lot of lump sum payments. It is very important to be very systematic and disciplined about the lump sum amounts that you get, so that they are there to serve your needs over a long period of time. You may have certain responsibilities to your family and you should discharge those. And after that, whatever is remaining, that you should consider investing in a product like an annuity product where you get lifelong or very long-term income. There are multiple options available where you could plan for an annuity where you have a survivor benefit where the wife gets the annuity payments or the husband gets the annuity payment in either case. And in those products, what it will do is that it will keep your standard of living that you are used to intact even after retirement. So your pension would cover a large chunk of your needs and annuity will be topping up. But the most important suggestion I can give is that the lump sum amount that you get close to retirement, please be very systematic, strategic, and planned about putting that money in the right instruments.
Mr. Subramanian, if you would chip in as well, somebody who's already getting pension because they're a government employee, what are some of the other financial products to consider for their retirement?
Yeah, actually what happens is this man may not need too much of pension because he will be getting the government pension. What he should be doing is put some money in senior citizen savings plan, which pays about 7.15%. Government servants don't get too much money, so if he gets something like 70-80 lakhs or maybe a crore, he should put this into his name and his wife's name. He can buy these products, and some money he should put away in equity because he's still young. When I say young, I mean if you live till 100, then 60 is definitely young. So he should put away some money in equity, which he should be able to withdraw after his age of 80. Maybe at his age of 80, he buys another annuity to supplement his insurance.
All right, Mr. Pankaj Gupta and Mr. Subramanian, thank you so much for sharing those pearls of wisdom. I'm sure, the viewers are richer in their knowledge of what products to buy, when it's the right time to buy, and busting some of the myths around the cost of buying life insurance. And now perhaps they're better aware of why life insurance is so important as a product to think about and to invest in. On that note, we will wrap up this discussion. Thank you very much for tuning in and have a good day.
HDFC Life and CNBC Awaaz present Bima Sabhi ke liye. Focus, ideate, innovate, enable.